think that the immediate outlook for the economies, especially in Europe, are bleak, but there are increasing signs that the acute risk phase is going to be relatively short, and that's going to give us opportunities, particularly in equities, on a 12 to 18-month horizon. If you look at equities in Europe, on the positive side, the markets are functioning, the banks are reasonably well capitalized, and the payment systems are working. We've had government responses that have been impressive in both scope and speed, and there's been commitments to do more, and we think they will need to do more. And just this week, we've had short covering, a weaker dollar, and month-end buying. That's all been positive. But if you take a medium-term outlook, so looking towards the second quarter, we think that we're going to see really weak economic numbers. In Europe, it could be something like a 15% decline on average. It will vary by country. We've had essentially a shutdown recession with demand collapsing overnight, and Europe went into this phase with weak growth of only 0.1% in the fourth quarter. Then you've got the implementation risk of the government measures. We need to see the flow of credit to non-financial businesses, and it's got to be in enough size, it's got to be fast, and it's got to be focused on where the need is greatest, particularly where the income support is most needed and where the corporates are most needy in order to keep their productive capacity.
Okay. Jeffrey, let me just jump in then at that point, because I just wanted to pick you up on something you said right at the beginning of your answer, where you said that we see the impact as being relatively short-lived. What is the scientific basis for that assertion, given that when we look at countries like Spain, we still see acceleration in infections, and Italy clearly hasn't stabilized yet?
Yes, the virus will run its course, but what we're seeing in a country like Spain is an extension of their lockdown period. And from a market perspective, that's positive, because it means that we're going to take the economic pain early, and it's going to be severe, and thereafter we build a base for a recovery. And that's what we'd be looking for as a medium-term investor, when we can see a baseline from which economies can grow.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.